I would also make the observation that, most of the statistics from the government, that purport to measure the GDP or the inflation rate or the unemployment rate, they're warped. And so a lot of economics today is all revolving around getting you to accept a warped metric and then continuing to warp it such you come to the wrong conclusion.
Right.
And this graph is a classic example. This is the official, Federal Reserve published graph showing the debasement of the dollar over 100 years. And if you took it at face value, what it says is that $26 is worth $1 today, and you lost 96% of your purchasing power.
Bitcoin volatility is declining on schedule, but BTC price action could still play catch-up with gold this year. The latest data and analysis show that despite sideways moves in Bitcoin, the largest cryptocurrency is behaving as expected. Hello and welcome to Money Talks. In today's video, Michael Saylor updates about his outlook for Bitcoin in 2023, the importance of regulatory clarity in the space, and how it will drive the future of institutional adoption in crypto.
I'll give you another number, which is in 1933, gold was $20 an ounce. And in the year 2020, gold was $2,000 an ounce. And you don't got to be a rocket scientist to figure out that's a 100x increase, which meant that the money supply or the US dollar lost 99% of its value against a precious metal, the king precious metal. But that's not the right number either, because I'm sitting in a house right now, and the deed for the house, the transfer of the house was $100,000 in 1930. And the house had somewhere in the range of $10,000 to $20,000 worth of land under it. So the price of land in Miami Beach, let's just be generous and say it was $20,000 an acre in 1930. It's easily $10 million an acre today.
Right. That's
500x. Okay, that means you lost 99.8% of the value of the dollar in 100 years, and in 92 years. Right. And that implies 7% inflation a year. So gold bugs see 5%. If you want to own a nice beach house in Palm Beach, it's 7%. If you just want to live in your parents' basement and eat boxed cereal, right, and you want to live with the CPI things, if you want nothing nice, then 3%. But the government touched 2%. To be clear, I agree that this is a probabilistic assessment when you live in the US and you have to choose between gold, S&P indexes, real estate in Florida, and other derivatives and other contracts, and Apple stock. It's a probabilistic thing, and you got to have a portfolio view. But the interest rate in Argentina right now is 49% overnight. And the official inflation rate is probably 60, and the unofficial inflation rate is 80. And so you have a different view toward probabilistic risk when the ship is sinking and you're about to lose everything in 36 months. So I would say with regard to Bitcoin is an interesting, nice to have, and an intellectual discussion for people in Western Europe and the US and the developed world with a strong currency losing 7% of its value a year. But Bitcoin represents a life raft to the billions of people in Sri Lanka and Lebanon and Turkey and Argentina and Venezuela, not to mention the ones in Cuba and North Korea that have zero property rights.
With traders frustrated by the lack of tangible moves on BTC USD, volatility is under the microscope at the start of 2023. For analytics resource Econometrics, however, there is nothing to worry about. Bitcoin is becoming more stable with time, and this is a feature, not a bug. An accompanying chart of Bitcoin average 1 month realized volatility distribution came with a description of BTC being deep in bear market. The data showed volatility ebbing at identical points in every 4-year halving cycle, making 2022 firmly fit the trend of volatility decreasing more in each bear market year.
And if you want to have money, you can't depend upon the currencies. So if you're lucky and you're wealthy, maybe you can buy buildings and start Standard Oil, and you can invest in big tech. But what about the taxi cab driver in Nigeria? What about the 4 billion people that are, that are unbanked? And what about the other 3 billion that don't happen to be in the top billion elite? What about them? So in our lifetime, in the next 10 to 30 years, I don't think the entire world is going to be revolving around Bitcoin. I think that what you'll see is Bitcoin is a reserve asset that can replace gold and can replace land and can replace portfolios of stocks as a long-term treasury asset. I think that everybody in the world, as long as they're nation states, you have to respect the Argentine government and you have to pay your taxes in the peso, even though you don't like it. And then you got to respect the US government. The USD is going to be the world reserve currency. In China, the CNY is going to be strong. So in Europe, as long as the European Union lasts, the euro is going to be a player. So the right way, I think, for us to think about it is what portion of your monetary assets are sitting in dollars, what portion is sitting in pesos or bolivar, and what portion is sitting in a liquid treasury at reserve asset like Bitcoin. And then what portion of your wealth would you have invested in buildings and stocks and collectibles and derivatives and bonds?
Despite evidence that investors plan to participate in crypto in 2023, most market participants are not feeling bullish and are reluctant to engage with risk assets. The index currently sits at 26 out of a 100-point scale, which is the same as in December. Such a high level of fear is even more significant during periods of low liquidity. Market activity continues to fall, reaching volumes not witnessed since Binance introduced zero trading fees for BTC pairs on June 24th. The low spot trading volume suggests that muted market participation will continue in the early part of this year. Some analysts believe that the January 12th United States CPI report will show a spike in inflation. If this is the case, the Federal Reserve may continue to raise interest rates, which has caused crypto's market cap to decline in the past. With the possibility of further interest rate hikes combined with the current market sentiment, potential DCG bankruptcy, and decreased market liquidity, the crypto market could react with another drop to the downside.
I think that it's idealistic to think that somehow all of the world's problems get solved in the next decade with Bitcoin. That's not true. But what is true is that if you're about to become poor and starve to death in the middle of a country where the currency is collapsing, it'll solve your problem. It solves the problem of people in Lebanon or Turkey or Argentina or Venezuela. It solves their problem. And if you're a middle-class person driving an Uber in the United States, you can't very well buy an 18th of a building. So it gives you property rights. You can buy a piece of property and you can save for your retirement using that property and not rely upon a third party, right? So it is a particular solution to a set of problems that individuals face. That's why we promote it, right? What would happen if every foreign nation sold their U.S. sovereign debt? If the Chinese sold all their debt, the Japanese sold all their U.S. Treasury bonds, if no one outside the U.S. held the dollar, then when we printed a lot of money, we would see double the inflation rate.
See Argentina.
And we 1980, we saw it, George. In 1980, I think the dollar was maybe 40% of currency transactions. And we know the Soviet Empire had its own currency, and there's the German mark, and there was the Turkish lira. You had lots of other currency systems, and not everything was trading against the dollar. I mean, the Indian economy was closed. The Chinese economy was closed. In that environment, we managed to create 18, 19% inflation in the US. We had to take interest rates to 19%. Why is it? Because instead of printing an extra $5 trillion and spreading it across $100 trillion of other people's money, we printed the money and we spread it just among American citizens. So I think if you read like the Creature from Jekyll Island, the point that the author makes is, the Federal Reserve printed all this money and the taxpayers inadvertently paid the bill and they didn't know it. But it's not quite right. The right statement would be the Federal Reserve printed the money and then anyone holding US dollar or US dollar currency derivatives, including bonds, they all paid the bill.
So, do you agree with Michael Saylor's take on Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.